As the lockdown ends and the economy reopens, the first thing is we need to do it in a sustainable way. And nobody wants to do this, but it's really good if we do. And that is, I think, to the extent we can continue to observe those, keep a distance, wash your hands, wear a mask, that kind of thing. That's really going to help. That goes with a fast reopening of the economy. That goes with a successful reopening. So those things are really important. I also think, we at the Fed need to keep our foot on the gas until we're really sure that we're through this. And that's certainly our intention. And I think you may find that there's more for you to do as well.
Well, and as traditional snapshot of the banking industry during this unique time will likely not paint a rosy picture based upon the recent shutdowns and phased in recoveries. However, bank capital levels and reserves remain historically strong, as we've talked about, and there are many borrowers that could return to profitability once the economy rebounds. So, Mr. Chairman, what steps are being taken to ensure that the regulators are taking a reasoned approach to oversight, and how is that being communicated to the various Federal Reserve district banks and the examiners in the field?
We have, on a number of occasions, we've issued public statements, public communications to our supervisory group, and the other banking agencies have done that as well. And essentially, it boils down to guidance that we want you to work with we want the banks to work with their borrowers. We don't want to be, on a hair trigger to classify loans or call them trouble loans or anything like that. We want to look at this as an unusual situation and be flexible and thoughtful about the way we do our jobs. Of course, we haven't been really supervising. We're only starting to supervise again. And at the Fed, we're going to do it remotely. We're not going to be visiting yet, but that time will come, I think, fairly soon. But we're doing training for our supervisors and things like that. So we really want to be. We've also, by the way, we've encouraged banks to use their buffers. They've built up these buffers during good times. And that's a great thing now because they can use those capital buffers to make loans and to work with borrowers.